Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar, Mapping Out Your Week Ahead. Special welcoming goes to new people, of course, and for you, just to explain the meaning of the title. It's very simple. What we're trying to do is to get more organized, to make a plan for the week. And as traders like to say, you plan your trade and then you trade your plan. Of course, it doesn't guarantee success, but it definitely improves things and gets things in order and in structure. A few things about myself. My name is Simon Friedman. I'm Senior Account Manager with AvaTrade. I have an experience as a trader for the past 25 years. I started as a prop trader in New York City, June of 2000. And I did it for about 11 years straight, and then I left that stressful environment and I continued trading and also started to mentor and educate others. And that's my journey so far, and I'm very happy I have this great opportunity to be assisting our customers at AvaTrade. The agenda of the webinar, as usual, we talk about indices, stocks, commodities, forex. We combine some fundamentals with some technicals. We'll take a look at economic calendar. We'll take a look at some highlights, some articles that I usually prepare the screenshots from. And we'll try to put things together and try to make sense out of upcoming trading week. Risk warning, you can find a full statement at avatrade.com website. Of course, everything we do, it's purely educational. We do not give signals or recommend any trades here. Social media, please feel free to follow us on Twitter, X, which used to be, actually X is Twitter, Telegram, I'm sorry. And YouTube channel, which I usually say it's my favorite. You can find a lot of tutorials, educational material, and webinars as well. My colleagues and I, we do the webinars. They're being recorded and posted on YouTube, so don't sweat and stress. If you miss the webinar, you can always find it on YouTube and watch it at your convenient time. If you are watching this, click likes. If you just keep to fake it and share it with people that might benefit from it as well. And write your questions and feedback if you do have any. Of course, subscribe, click on that bell so you'll be notified. That's important. All right, so before we go and jump into the action, it's been a weird week, let's put it this way. It was 4th of July, of course. America is celebrating its independence. Barbecues, holidays, fireworks, fun, long weekend. Because of that, the NFP numbers were moved day before. On Thursday, we had the numbers. People were already preparing for the weekend, so it was a weird kind of trading, but the numbers came high. Before that, on Wednesday, we had ADP numbers, which were negative. So there was kind of a expectation for something similar, but the numbers came high. Markets are at the highs. We did close pretty much at the highs on the Nasdaq and S&Ps. Dow Jones is catching up. Now, we had some tariff-related issues which pushed the world markets on Friday lower as the U.S. market was closed. So we could be expecting the market opening lower, maybe with the gap and continuing. We'll see what happens there. Okay, let's go to some articles. Let's take a look at what's been happening. So as you see here, this is from Barron's. Stock hit record highs. What's behind the rally? And of course, it says right here, Liberation Day might have been a stinker for the market, but Independence Day has been anything but, as stocks fought their way to all-time highs to close out the holiday shortened week. So as we know, April was panic sell, then we recovered and closed at the highs. It says right here, S&P's gained 1.7% this week. Nasdaq Composite gained 1.6%, each closing at fresh records. The comeback since the trade crisis has been even more impressive. The S&P 500 is up 26% from the sell-off on April 8, while Nasdaq has surged 34.9% as the worries from supersized tariffs to the U.S. Artificial intelligence dominance have slowly faded. One by one, all the tails risk and that took the stock market nearly into bear market terrain is in early April are being removed from the list, notes Rosenberg Research David Rosenberg. All it has taken is dodging bullets to bring the S&P 500 to new record highs as the momentum and sentiment-driven market rally continues unabated. He some numbers very interesting. Investors traded a record 6.6 trillion worth of stocks in the first half of 2025. And it says right here, retail investors cumulatively bought around 3.4 trillion worth of equities over the first half of 2025, according to data from Nasdaq. At the same time, they sold about 3.2 trillion worth, bring the total traded to over 6.6 trillion. Impressive numbers. Now, the bill was signed, right? As everybody is kind of making fun of it, a big, beautiful bill. That's the way Trump names it. And it says right here in the title, President Trump signed his legacy tax and spending bill in the White House ceremony on Independence Day. We are adding the biggest tax, this is the quote from Trump, we're adding the biggest tax cuts in the history of the country, Trump told the crowd in South Lawn filled with members of his cabinet and Republican lawmakers. It was supposed to be 5, 6, 7 bills, and I said, let's put it in one big, beautiful bill, and we did. Today's really a day promised, made, and promised kept. The president said, we kept them. So that's on the positive note. On a negative note, we're back to tariffs, and on the 9th, which is Wednesday, it's a deadline of negotiations. So far, there was a deal made with United Kingdom and Vietnam, and there was a truce made with China, giving a little bit more time for discussion. And there's more than 100 countries awaiting the deal, right? So here there was the announcement. Global stock market will largely, that's what I meant in the beginning, largely downbeat on Friday after President Donald Trump said he would start sending letters to countries setting new tariff rates. Trump told reporters Thursday that the letters around 10 a day will start being sent Friday. He said the rates could range from 60 or 70 to as low as 10%. His comments mean global investors are starting to fret ahead of the July 9th deadline for imposing so-called reciprocal tariffs by the U.S. We are probably going to be sending some letters out starting probably tomorrow, maybe 10th a day to various countries saying that they're going to pay to do business with the U.S., he said Thursday. All right, so, and that's the reason the markets, we'll take a look at the European and others when we get to the chart. So it's going to be interesting how the market will open. Based on this, we might see the gap in the market. The question is, will we continue lower, or we're going to stop or continue stepping up with new highs? Now, this is the situation as of now for the next meeting, which is happening on, or the announcement is happening on 30th of July. As of now, the probability of the rate change is the rate cut, sorry, 4.7%. It gradually went down. A month ago, it was 30%, then 18.6. A day ago, or the end of the week, was 6.2, and now it's 4.7%. Let's see how that works. Now, economic calendar, as you can see, is very small. Now, I'll explain it to new people what this is. This is public information. You can access it on our web trader or the app. It's available to everyone. You can also Google it. There's tons of providers providing this same source, same information. And the traders, I think, should have knowledge of this prior to the event, so you can prepare yourself and at least know that certain things are happening. So here I usually take the high impact events only. You can choose whatever's relevant for your trading filter and so on. So these are the things as far as the high impact happening this week. Retail sales on Monday from European Union. Tuesday, interest rates from Australia. They're expecting to cut it by 0.25%. Statement and press conference following. Wednesday, CPI numbers from China, interest rate from New Zealand. Here, the expectation is the same, no change at 3.25. FOMC minutes, that's for June meeting. We're going to find more details of the thoughts and thinking and thought processes of the FOMC committee. So that's on Wednesday, FOMC minutes. Friday, we have CPI numbers from Germany and unemployment data from Canada. So these are the things, among others, that are happening as far as economic calendar. Now, winners and losers. We'll take a look at these guys individually when we look at the charts. Now, as you could see, similar names every week. One week they go up, next week they go down, and so on. So on the futures, mostly commodities here, right? Heating oil up 7.5%. The grains moved this week. Corn up 4.21. Platinum continues to be strong. We'll take a look at the chart and some patterns there. Platinum up 4%. Wheat up 3.73, soybeans up 2.58, gasoline up 2.31, silver up 2.1, and gold up 1.79%. To the downside, we had a move down. Cocoa more than 10%, natural gas almost 10% down, and coffee continues sliding this past week, down 5.82%. In the Forex world, the percentage, of course, is not as high, but these are the highest winners and losers among the FX. Euro pound up almost percent. Bitcoin US dollar up 0.78. Euro USD up 0.46%. To the downside, pound yen was down 0.62%. Dollar CAD 0.60. Dollar Swiss 0.60. And pound dollar down 0.57. So from here we can see that the pound is actually pretty weak. Besides the dollar being weak, pound is even weaker here. So that's something we'll take a look. So these are the winners and the losers for this past week. Now we'll take a look at the charts, and as usual we start with indices. Let's see, we'll start with China. You could see here, we've been watching China for a while. It is trying to break out. We did have this move here in March. This is the weekly chart. Then another attempt in May, and now it's the third one trying to break out of this 13,720s. You could see on the daily chart, you could see it clearly. There's a big spike here, it came back since then. We've been trying to break out at this level. Few attempts here in December, then March, as we said, then May, and we're trying again. We are above all moving averages here. Let's see if we manage to break this time. Japanese index, we had, as we said, we had a retest of this level from back in January. We failed to move higher. The very next day was a sell-off, and this was strong. Some traders, call it liquidity run, and sometimes after that, they expect the turnaround and continuation to the opposite direction, because it took a very long time to get here. we here on January 24th, and then June 27th. A little bit over 5 months it took to get back to that level. So let's see what's next. Of course, situation with yen and situation with global markets will be affecting the Japanese index. Now let's take a look at German index. You could see here Friday, it was a red day there. UK, also red day there. There wasn't probably a lot of actions there because the US market was closed. So usually when the US market is closed, the other global equity markets are moving less or slower or less volatility, less liquidity. French index as well, we're testing the 200 moving average here. So the question is, with the tariffs, we're approaching that Wednesday, the 9th of July, and we are opening after the announcement on Friday that the letters are being sent to those 100 plus countries, tariffs. So that logically would inject a little bit more uncertainty, and the market, as we know, doesn't like uncertainty. So we might see some moves to the downside. Now on S&Ps, as you could see here, we did close the week at the highs, even though on Thursday the market was closed. What's that? The 4th. It was still a short session, right? In futures, right? So that's why we see this move here. S&Ps, Nasdaq, similar situation. We're at the highs and move down on Friday, short hours. Here we go on Dow Jones. We didn't break through the all-time highs. We're a little bit shy of that territory. And even the small caps had a nice run recently. Similar to Dow Jones, we are not at the all-time high. So again, we established that global markets got spooked a little bit by these letters being sent. US market was closed, so we don't know how is it going to react to these things when market session comes in. All right, moving to stocks. Of course, we should or must pay attention to NVIDIA, as it's leading the technology, and technology is leading the Nasdaq, and the kind of gives a boost to the global markets, especially US markets, of course. We are moving high here, all-time high on NVIDIA. Also with this truce with US-China negotiations, one of the aspects there, if I'm not mistaken, I think they removed any bans or reduced the bans on semiconductors and chips being sold to China. So this was a very positive thing for NVIDIA. So NVIDIA all-time high, clearly. Now the rest of the big boys, as we call them, are strong as well. Here comes Netflix. It's a little bit of a correction there. Apple finally moved after being really sliding lower. We had 4 consecutive sessions to the upside. Microsoft at the all-time highs. Google is trying to break out from this recent resistance. Amazon, congratulations to Bezos again. I think he's been married for a week now. We are around 220 here on Amazon. Meta, for some reason, Meta, after reaching the all-time highs or breaking the previous high here, we're kind of sliding here. So maybe there's certain news coming out, because this past week, that pretty much every day was red there, right? Tesla is trying to break out. It's trading around between 290 and 335 here, the levels are, right? And take a look, we had the 50-day moving average slightly crossing to the upside, the 200. So that for some analysts could be a signal for buying. So we might see certain things happening here. Now, I think, I don't know if I mentioned last week or I mentioned to my team, there was a birthday of Elon Musk, and he'd give himself a present. He actually, they showed it all over the place. I'm sure you've probably seen it. That the Tesla left the factory and self-delivered itself to the buyer. So basically, Tesla drove by itself without a driver and arrived at the house of the happy buyer. So that's pretty cool, I think. So let's see if Tesla manages to continue high here. Now, oil stocks, as the oil recovered a little bit, that's logical. They would see a little bit move on Exxon and Chevron. Take a look. We had the nice 3 sessions to the upside, retesting the 200 moving average here. Chevron didn't get to 200 moving average yet, but had a nice reaction to the upside. Now, banks, very important, and I always watch banks as the leading group as well. They're just skyrocketing. They're continuing moving higher, making all-time highs, and that shows excitement on the market, right? Goldman Sachs trading at 722.79 closing. JP Morgan 295, almost 296. Bank of America, despite Buffett selling it, the stock is doing great, moving high, all-time highs, and Citi as well. So the whole sector, the whole banking sector, looking very healthy, very happy, and continues running high. All right, we're moving to commodities now. We'll go through those winners and losers. I have them here lined up in order. Heating oil, we said, was up 7.5% after the sell-off, of course, with the ceasefire between Iran and Israel. There was a huge drop here in all energy commodities, and slowly we're trying to lift their heads here. So up 7.5%. Let's see if we cover this drop, we cover more of it, or we come back. We'll find out. So corn, as we said, grains finally moving a little bit. We had a nice move this week on corn. Initial move here happened on the 2nd, that we raised the previous 5-6 days of selling, and then we followed that nice move with another green day. This could be a possibility for a reversal. We'll take a look what's happening there. Platinum continues the same thing, and as I mentioned to you, the same pattern. The whole week we go up, and then Friday we sell, and on the weekly chart you could see it very nicely. You see, we had a nice strong move and then give away more than half of it. Another week, strong move, half away, give away more than half of it. Another week, and this is the same week. The week that we didn't give it up in this recent upside move, that was the first week of June. We closed at the highs, and then 1, 2, 3, 4 weeks in a row, a month worth of trading. Similar situation, all week up, closing the week, taking profit, and starting over again. So let's see how things will work out. The thing is that here it's pretty much, no, never mind. Let's see if this pattern continues, or we might see some profit taking. Just to remind us, I showed you a while ago a slide where some analysts are very excited about platinum, and they give an example of 2014 when platinum was $200 higher. The price of platinum was $200 higher than gold, and today gold is trading about 3,300, and platinum is half, not even a half of that water. So we might actually see the catch-up game continue. Wheat, another grain. As you could see here, a lot of consolidation here. We're building a very strong base here on the weekly chart. On the daily chart, after the sell-off, we had a nice recovery, breaking above 200 moving average again. And let's see, maybe grains are starting to moving higher here. As you could see, soybeans, the same thing. We've been sitting here in this range for a very long time. And on the daily chart here, we are trying to break it. There's a lot of accumulation here in the tight channel, as you could see it on the weekly chart. After this recent drop, we've been sitting here trying to recover since August 2024, almost a year. You could see we moved higher, then we built the base here, and we retested it a few times. A lot of accumulation, fake breakout in the weekly chart, moving higher but failing to break through the resistance. Came back again, another attempt, but now we're sitting closer to this without really a retracement. So maybe grains are building up for moving higher, or maybe not. There's always two possibilities. Gasoline, another representative of the energy commodities, also up 2.3%, trying to recover from this drop. Silver is holding very, very nicely, better than gold even. You could see here, we did have some pullbacks where the tails were coming right back and looking very, very strong, potentially ready to move higher. Let's see if we are at the all-time high. No, we're not. So similar situation here. It's trying to catch up with gold, creating all-time highs. And on this time frames here, it looks very, very strong. It's holding these current gains. And gold, of course, it's struggling with this trend line that we had drawn, I think, 2 weeks ago. We did break below here on the 27th of June, came right back and really playing around that trend line and also sitting right above 50-day moving average here. So let's think logically. If this tariff letters and deadline expiring on the 9th, if that should bring more uncertainty to the market and market should go into risk of into a selling mode, we might see more money coming into safe haven. That includes gold, yen, and Swiss francs. So we might see actually another push to the upside in gold. If that doesn't happen, I mean, we clearly see the next resistance, which is the recent resistance here from June 16th, and that was around 3450 area. Okay, so gold up 179% for the week. Now going to losers. Cocoa, a big losing week after making a lower high here. We still didn't make a lower low, so that could be next possibly happening. So cocoa down 10.5%. Again, for new people, just to remind us, there was a huge move on the physical shortage of cocoa beans in West Africa, especially Ivory Coast. Since then, there was a lot of actions here, a lot of tails moving, making all-time high in December, sliding lower, another attempt making a lower high, and now we could be going into that reversal or not. We might find support here again around 7,800 as well. So cocoa, we don't know, and that's the beauty of being a trader. You don't really know what's going to happen, but we try our best, have a plan, manage the risk, and look for opportunities. So cocoa down 10.5%. Natural gas, after playing with that $4 number here, since then we've been sliding. We broke the 150 and the 200 moving average here. It could be that we're trying to close the gap before anything else, but as of now, it's super weak. We'll take a look what next in natural gas. It's down 9.41% past week. And the last one is coffee. Coffee has been sliding. It is testing this previous support, which wasn't really such a strong support. It was just a spike on the weekly chart. So if this continues, we might actually continue sliding lower here on coffee. I guess it's the opposite of the cocoa shortage, and coffee has been acting like it was a surplus, at least from fundamental point of view. We had a huge move down, a correction, and now we in the second big wave to the downside. Let's see if this 289, 290 level means anything. We did try to move lower, but recovered, and the very next day, another red day here. So we'll watch coffee. Some traders like to catch reversals, but others are afraid of catching a falling knife. So it's always a dilemma. So traders would probably watch the initial move if this is going to be recovering to the upside, and then maybe buying a pullbacks. Some high-risk traders will definitely try, and that's what we see these spikes happening, right? So we'll see coffee down 5.82%. Now going to Forex, the winners, Euro Pound was up almost 1%, 0.99% for the week. You could see here, after correction here, we moved higher, and we're sitting right here on this level. Important to see these things visually. This was the resistance from which we had a nice sell-off. So we're testing that level again here on Euro Pound. Bitcoin, we'll take a look at the end. Euro Dollar, you know what, we skip the dollar index. We usually start with that. So that just gives us an idea. Dollar's been super, super weak here, right? With tariffs and everything else. We've been in a really downtrend significantly here. So we have, let's take a look at the weekly chart. If we see anything coming up. So we don't really see any serious levels here until 94.87 area around here, right? So there is a possibility that we might be continuing lower until we find some solid support. Now on the daily chart, some buyers are already trying to step in. As you could see here, we had two green sessions here. And this is the situation with the dollar. Clearly, we're having a downtrend. It's obvious. So let's see how that plays. So going back to euro dollar, it's just the mirror image of it. It's been moving strongly to the upside. As you could see here, we are approaching, possibly if we continue higher, this level here around 119 could be a strong resistance. We did try that resistance, establish it very nicely with the 3 consecutive months here actually. And on the weekly chart, we are second consecutive week here. The daily chart, it looks like we are hesitating at this point. So let's see how things will play. Of course, the tariffs and everything else will be affecting it. And we also have FOMC minutes from the last meeting. Let's see if that does anything for US dollar here. Now, to the downside, pound yen, as I said, pound's been super weak here. Pound yen, where are you? Here we go. On the weekly chart, nothing major, but it was a red week. And let's see, a lot of consolidation here. As you could see, tight trading. And we are facing around this area a strong resistance here. So the closer we get to it, it looks like the sellers start appearing and the buyers are getting a little weaker. So that's pound yen. Dollar CAD. Dollar CAD went down, of course, a lot of it to do with the strength of oil. We didn't see oil. I'm going to show it to you in a second. We forgot about it. I apologize. So with this, a little bit of a strength of a dollar, the Canadian dollar continues to be stronger here. On the daily chart, as you could see here, with some waves, we are stepping down, clearly downtrend on dollar CAD. Of course, main issue here is the weakness of the dollar, and we're coming in this pair to possible support around this level, and let's see if that holds. Dollar Swiss, of course, Swiss is one of the safe havens. It's been super strong, the Swiss franc, and especially against the dollar as well. So we'll be watching this trend line here. It continues to go lower. Let's see, the monthly chart is nothing to see. If you remember, we mentioned we're trading currently at the level of 2011. September 2011 was a big up month, and we are trading within that territory, right? It's almost, we're talking about almost 14 years ago. So that just shows you the strength of Swiss franc. Super strong. So Swiss franc, dollar Swiss down 0.6%. And here we go, pound dollar is down for the week, 0.57%. Just trying to see, there's nothing that could be stopping here should it continue higher. Of course, the main reason would be the weakness of the dollar probably, but the major level here is 142. We had a lot of actions here back in 2018. We had few attempts to break again. This was February 2021 and May and June 2021, 4 years ago. So if pound decides to continue higher, this would be a strong level of resistance here. Also, the 200 moving average here on the monthly chart would probably be resistance as well. So that's as far as FX. Let's just take a look at oil really quick because I totally forgot about it. By the way, oil, I think the latest thing, the OPEC decides to increase production. And I think that's why we had this sell-off. I don't know, I'm just speculating here. Oil similar to heating oil and gasoline. After this drop, we are trying to recover here, but there was a big challenge ahead of us, the 200 moving average here. Let's see if that happens there. So that announcement by OPEC Plus, it's not really helping. I don't know how serious that is. And of course, with the ceasefire, or I don't know if we can call it the war over with the Iran and Israel, but officially I think it's a ceasefire, I'm not sure. Things are quiet in the region, or more quiet, and that makes us think that supply shouldn't be interrupted, right? And not only that, now OPEC decides to increase the production. So let's see what oil does. Now, Bitcoin and XRP, the Ripple. Now, Bitcoin is holding about this key level 106,400. You can see here, that's exactly where the 50-day moving average is now. We are holding the all-time high we had back in May, I think, right? May 18, the week of May 18. So this is our indication as far as the all-time high, somewhere here. And as of now, the latest retest to the downside with this spike, we tried around 98,000. So this is our between 98,000 and 112, let's say. And we are trading above the 50-day moving average and above 106,400. So as long as that is holding, it's clearly holding up this uptrend and possibly preparing to move higher. XRP, a lot of actions here. We did try to break through $2 recently, June 22nd. And we moved right back up. There was a brief, very brief, short-lived retest of $2. And we are trading currently at 223, above, a little bit above, right on 50-day moving average and below the 200. So I guess for the strong move to the upside, we would need to test the 200 moving average here. And technically, this level here around 234 is the immediate resistance. All right, I think that's it. Let's just put things together. We had a short week. We had Independence Day celebration. We had Trump signing the very significant, big, beautiful bill. Ahead of us, we have FOMC minutes from the last meeting. We have deadline on the 9th of July, which is Wednesday, for the pausing on tariffs. The letters are coming out, and I guess we'll find out how the market will react to it. We'll take one day at a time, and we'll watch the market and act accordingly. I want to wish everyone a good weekend, get some energy, spend some quality time with your loved ones, prepare yourself for the week, and have a wonderful, successful week ahead of you. All the best.